Hey guys, Bitcoin, and the sell-off, the big sell-off. So what's happened? Before we visit this pattern and the detail, a little bit of history. High rising HVFs where there's strong buying through the pattern along the bottom typically are not our everyday butter and bread. Why? Because they point to a lot of buying that has gone in through the consolidation. However, in cryptos, which have been such an expansive market, as you can see, high rising from the relative low all the way through to the relative low 2 to the relative low 3 are actually breaking out and making targets. Main reason for that is a lot of money being poured into the markets. In other words, that buying through the pattern is just the beginning of something far bigger. You can see how this was nicely set up just around the 2,800, and the resistance levels were all coming in. So they have quite a lot of round number resistance levels. You were approaching the key level of significance of 3,000 back here. Of course, fundamentally, there was the Sedgwick, there was the Bitcoin's cash, but those are all the narratives. We're looking at this from a technical perspective in terms of the charts. And if you look at the charts, there was a lot of selling here, there was a lot of selling again here, even though this came up really strongly and impulsively and showed really powerful buying, knocking over the price there. You saw it, and then it came in again here and then drifted down. It broke from very high up, and then it just smashed it and actually overperformed quite substantially. And that is a high rising setup. And that's because there's a lot of expansion in the market and a lot of new money coming in. And that's why it was showing its way there. But it continued to show its way and was dominant. Sometimes in the FX markets and other markets where we see this, what typically happens is two things. It fizzles. It breaks and then it fizzles because too much of the buying pressure has already been absorbed in the pattern. In other words, it's not there to follow through. Only in really strong markets where it's the beginning of a wall of money chasing do you get the overperformance. So rather than just getting a good target run and then a pullback, you either get smash up overperformance or you get a fizzler. Now this one, having previously seen this work so well, did something slightly different, and it turned out to be a bit of a fizzler. So let's have a look at it. Now we know, okay, the fundamental news is caught up with it. If you go to Zero Hedge, you'll see that China is taken great steps and considers ICOs illegal. We know a lot of the buying. You've just taken a massive portion of the crypto population there in China, and you've taken them out of the game essentially in terms of ICOs. Are they really out of the game? No, they're going to find a way to get engaged. They're going to keep on playing. They're going to keep on doing what they do in terms of getting in here. But for now, it's certainly a setback. It's going to make things a little difficult. So that is why the news has driven this and smashed this down. We had a rising wedge, which by the way traditional technical analysis says should break down, but before that, often in a practical sense, you get a pop out the top, and in actual fact we went into another rising wedge on a shorter time frame before the pop out the top occurred, and we bounced on the roof of the previous wedge. Let's drop a time frame and have a look at that and just show, I suppose, in essence what actually happened, so that we can better understand what's likely to happen following that. So there's the new wedge popping out the top of the other one. That's often what really happens, is you can actually get a melt up where it goes right the way to the top and runs target. You get a short-term pop out the top before a smash down, which is what occurred there. So a lot of grind buying coming along the wedge. This eventually clearly exhausted the buying, and then the news about what's going down with ICOs and everything is then seen in a very negative light, and it's a setback. We got an inverted HVF structure that smashed down towards the target, then went into a rising wedge again, which implied another sell-off back into these funnels, continued support in the funnels, back into the downside funnel, little mini micro fractal of a head and shoulders. We don't call them head and shoulders because they're not cyclical highs, but it has the fractal nature of it. And there you go, you get a little bit of a run on that target, and now we're bleeding through the funnel. This is Bitcoin against Tether. This is the worst of the charts. So just to be clear, in actual fact on the euro, the funnel hasn't even been run yet. It may still occur. That would be your technical stop on the euro. It may still occur, or this could still do the following. It could bounce, have a really strong second impulse. You're not feeling it at the moment, I'm sure. As you know, maybe some of you are some stress, there's some emotions coming in. Just got to stay calm. And view everything rationally from your technical standpoint. You could get a wind up and smash home. I don't think that's the highest likelihood scenario, but we could get support here for Bitcoin against the euro. Slightly different, I think it is on the pound. On Coinbase, I think you put a toe through that level after a spill on a grind line there. You could see that was coming and bringing you back down into the funnel levels above. But typically, if we have a small foot through, we treat that as a fail for the pattern. So euro is still live. Pound on Coinbase and USD are both done for. Still a bit volatile, so that points to the possibility, whipping up and whipping down, whipping up, whipping down, points to the possibility of further downside. I'm going to take this particular chart through into the 15-minute zone just to warn you that this has inverted HVF structure in it again. So this could be a wind up to smash through the funnel level and stay below that. Target for that would be like this. So you'll learn all about how to do inverteds and how we draw them and key levels of significance, etc., etc. But if we get a midpoint somewhere there, that would take you through that level. But it's not the hugest target, but it's because it's a small pattern, but nonetheless it's still pointing to a little bit more downside. It's what happens after that that becomes important. So this is what most of you will know. Having lost as much as you have on your holdings, a little going from 344 to 3300 may not be, it's not pleasant, but if it's the end, you don't want to be the panic seller there. So what do we do? What do I think could occur next? And these are the three scenarios for it. And I'm going to do it on the dollar, which has been the strongest. And this is probably, I would argue, the ugliest of the setup charts. It's broken that funnel. It's still looking like it's working, grinding a new low down. I want to show you also one other chart. Which one there is it? Got a lot of the Bitcoin charts, and I'll wait till I'll find it in a second. There's the one I wanted, the Bitstamp one. A little bit of a descending grind that we are breaking down on. In the long run, you probably do a dip through this and then a rally and then it's the end, or you break straight up away from it. So it doesn't mean that this will go forever, but we can first fall through it in a bit of a final capitulation sell before a rally. So these capitulations in terms of size are pretty ugly, but there's been far worse. And you can see this retreating buy grind here shows that there are people that are taking up the dip opportunities to acquire some coin. Anyway, going back to what we called the worst of the draws was the Poloniex tether against Bitcoin, which is showing largely the dollar, only it's the tether version of the dollar. So what could happen next? I'm going to take the couple of scenarios that could occur, and I'll tell you in my take what for me are the highest likelihoods of occurring. Once again, this is not advice. I hasten to add. Not responsible for your crypto trading, and the last thing I want to do is get involved with that when it's selling off. Make your own decisions. 2 or 3 things could occur because of these nature of the setup here. This is 4,200 up to the key level here of 4.5, just under 4.5. Lots of volume took place here. This is bouncing up against a flat ceiling and with the ascending bottom. So each time it's got quite a bit of buoyancy, it's bouncing against that ceiling. That gives you quite a lot of volume by price that has occurred there. This is something you will learn on a course that we do quite extensively. Volume by price. It gives you quite a lot of additional information as to where a lot of people have got in and or out of a particular coin at a particular level. So I will just show you super quick how that works. Fixed range, and we're going to do the pattern literally from when it started going from there to current. So you can see over here where the funnel was drawn over here. This is the high amount of histogram. Then it dips in the middle, and then lower down where we got this churning on this down leg is also a level. Surprise, surprise, 4,000 to 4,100, and then this is as you approach 4.3 to 4.5. Or 4.4. So this is approaching the 4.5 mark. That's your full 4.5 mark up there. So as you were getting closer, so thinner air as we approached 4.5. So this is quite a key level in terms of volume. Quite a lot of cumulative volume. These 3 histograms, and then again down here with these 2. So these Manhattans from the side are showing you where the volume took place. So we are bouncing in a level where a lot of people just came into profit or just going out of profit, depending on whether they're long or short. So quite possible that we get a reaction here of some sort. This is quite a strong sell-off move from over there, 4.6 all the way down to the better part of 4.2. That's a $400 move, one of the bigger of this capitulation series. And you would imagine that at some point there would be a rally. Now, if you get a weak rally in a rising wedge, then this is setting up potentially for a head and shoulders. So if you get a really low slung weak rally, something like this in a rising wedge, or it could be initially a bit impulsive, a little bit reactional and impulsive, but not get particularly high, somewhere around here or lower, that could be a setup for a further future sell at some point, or a secondary visit down, bear flag, and then sell, which would create an inverted HVF for the downside. So you've had an ascending on the right shoulder, you could have the head, and then you could get a inverted HVF set up on the right shoulder, having had the upside one on the left shoulder. That often happens in head and shoulders, and your neckline, we would take the funnel levels into account rather than the extremities down here. So you need to do a program to find out about HVF methods take on head and shoulders. But anyway, all that aside, that's one scenario. If we rallied really strongly and got well through the 61.8% and up here, the fact of the matter, even though you're not feeling it and it doesn't look a most likely scenario right now, would be that you could set up again for future continuation. You're probably not feeling it right now, and that's okay, but who knows how the markets will react when the US guys come back online again, having seen the sell-off. Eventually, some people might say cryptos aren't going away. This is a buying opportunity. Take the continuation. The final thing that will occur is just ongoing continued capitulation. This, I think, is actually one of the weakest probabilities, but would be the most unpleasant of the scenarios, and that would just be ignoring the volume by price, spilling through the lightly traded area, this area over here, bouncing into this, and also ignoring that too, and just running lower through there. And then you get into this a lot lower levels over here, where the volume was quite a bit lower during this continuation setting up period. This I don't think is particularly high. I think we're going to get some reaction at some point. It just could be weak. I think this is probably the highest one, so we could revert a little bit bare. There is an exhaustive element about this. The pattern, the grind buying through the pattern, the failure to make an upside target and then failing is a bearish event, and the grinding in the rising wedges eventually smashing down is a bearish event. The takeout of these funnel levels is a bearish event in terms of dollar and Bitcoin. So weak reaction, that might be an opportunity if you're in fear and or you're just concerned about losing value in Bitcoin. You could get into Tether and get out of Bitcoin for a while on the basis that this would be a right shoulder and sell off. A strong move up, as I say, I would withhold judgment and check then if continuation for upside might reoccur. And ongoing spilling from here could be quite serious and point to deeper pullback and downside, and be a potential concern for all things portfolio on Bitcoin. So yeah, that's a little bit about my take right now. 3 scenarios, watch them as they play out. Probability, a bit of a dull period. I'm not sure if you shake off the fact that China's now made ICOs effectively illegal in one day. I don't think so, but will it be killing the crypto project? No, not at all. I enjoy trading the existing coins, and I think the ICO is a bit of a bubble. There's a lot of insiders that are getting substantially lower amounts than you've been asked to pay on an ICO as a retail investor in ICOs. There's already been 2 or 3 rounds, often at a third of the price that you're paying, just so that some insiders can get money. It's very much an insiders versus outsiders game, depending on who you know. And if that model gets a little bit hurt, who cares? Metal listed without an ICO and others. And if the ICO model comes under fail, don't worry. It's not going to end crypto. Not the existing cryptos that have already come on board, not ones that have ICO'd without utilizing an ICO in private placement, and you'll probably find ICOs continue in different nations apart from China, and people still being able to get money out and get engaged in them in some ways as well. But I don't mind that model getting a little bit of a look at as well, in terms of how justifiable it is being perceived and value for the end investor. So that's my take I hope it's useful for you. Best thing is not to panic. The game is to build your Bitcoin, your quantity of Bitcoin. Final comment, and when you look at this here, is that generally the other coins sell off worse than Bitcoin. So the best thing is, while you're still in crypto, probably holding the Bitcoin is the best. Look at these percentages here. Outside of Tether, which is up by 5%, which means you could get 5% more Bitcoin when you bought back. Holding a vast variety, particularly of small alts, is actually quite an expensive endeavor. And as you can see, apart from one or two shooting stars, it's largely big double-digit percentage hits the lower you go down, minus 20%, minus 34%. That is pretty painful. You're losing a third, and that's just in a day. So one of the best holdings is probably to be in the Bitcoin itself. That's it. A longish clip, but I wanted to cover a few things. Keep your head, stay calm. You got to think about where will things be in 6 months' time. If you're euro-based, it's not yet as bad. It could still bounce at this level. And if that bounces for the euro, you can certainly expect in time it would be for the dollar as well. There is a little bit of ugly price action there. We identified an inverted on the pound. It's not quite perfect on the euro, but there is possibility of a little bit more downside lurking. But these are small patterns now, micro patterns. That means also the momentum is dissipating. When you start to get the micro patterns, the smaller ones like this one, it's dissipating, the targets down are dissipating, and of course they can fail to perform as well, which can be slightly bullish before rallying. That's my take. Quite a lot in there. I hope you enjoy it.